So, good morning, everyone. My name is Malachi Battle. I am the host and founder of WealthWise Live, and I'm incredibly excited to be back in 2026 with the first episode. Leaving off in December, one of the things that I talked about was how I wanted to increase exposure to different business topics this year. And so, to kick us off this year, we'll be talking about real estate and venture capital. My guest today has experience in both of those. Her name is Ilona Limonta-Volkova, and I'll now give her the floor to introduce herself.
Thank you so much for that generous introduction, Malachi. I'm so excited to be here with you this afternoon on a Sunday morning where I am in Southern California. And thank you to everyone for joining in today as well. I know you could literally be anywhere in the world, but you're here with us on Instagram Live, and we're so grateful. Yes, a little bit about my personal background. I'm an immigrant. My family is from Cuba and Russia. I was actually born in Cuba and immigrated first to Russia and then to the United States when I was 5 years old. So growing up in that kind of diverse and multicultural context really influenced a lot of the professional and personal decisions that I've made to this day. I'm sure we're going to dive into that, but doing a quick fast forward, we settled down in Louisville, Kentucky. I went to college at the University of Pennsylvania. I studied economics at the Wharton School and started my career in tech working at Netflix in Silicon Valley, where we were still shipping DVDs and about to launch originals for streaming. I then pivoted to the institutional finance side of the world, where I worked first in private equity, got my MBA at Northwestern, and eventually made my way to Los Angeles and working in venture capital, which is what I do now. And along that whole path and journey is how I started my own journey as a creator. I created my Instagram account. First, I was anonymous, and it was called Bear and the Bull at the time. Now you know me as Ilona on the Money. Just trying to demystify some of the taboos and misconceptions about personal finance. And since then, that's evolved into a whole separate platform where I write for Forbes as a fintech contributor, sharing my insights on the global financial technology landscape, and also have my podcast on NPR called Money Memories, where we break down people's earliest money memories and how that influenced their relationship to not only money, but also things like career and success. So yeah, that's a little bit about me. And again, so thankful to be joining with you all today.
Yeah, thank you for that brief intro. You've done a lot, I think, to say the least. And, typically with our guests, I like to get into kind of how they initially thought about money or business and finance in the first place. You've had some extensive education. I know between our conversations, you also have an MBA, and you got to work in private equity, and now you do venture capital. So how would you say, being an immigrant, between the education that you have, that you viewed money growing up?
Yeah, a great question. I always viewed money, and I continue to view it from very much like a scarcity landscape. When my parents immigrated to the United States, we were definitely not well off. Our first, my parents, even though they were brilliant engineers in their home countries, their degrees were not recognized when they came to the United States, which is a story I think that's familiar for a lot of immigrant households. And so my earliest recollections of money were actually, like, my parents studied and they went to like night school to get their degrees in the United States. And so my dad would pick me up from school, and then my mom and dad would like study the rest of the night. And I remember both of my parents were programmers, and they had these huge written code, and I would like draw and trace them, but they would be studying that all evening. And our first apartment was in Section 8 housing. I had, obviously, when you're 5, you don't even know what any of that means. But nothing was like given to us. Everything was like super, super earned. And actually, my first ever, when my parents were always very adamant about education. And when we first moved to the United States, we lived in a suburb of New York City. And my dad wasn't satisfied with the public school that was accessible and available to us at the time. And so he found a private school that he really liked, and came up to them and said, "I really want my daughter to go here. I can't afford it. what can I do to make that happen? And they offered him a job as actually like a janitor. And so in exchange for my dad like being a custodian and a janitor, the school allowed me to go there. And I think that was, so those are kind of some of my most like formative experiences with money. It was just about like sacrifice, but also a focus on like working really, really hard and trade-offs. And I think that's kind of like the through line in all my financial as well as professional decisions.
Yeah, so I'm sure that shaped you a lot. You know, your dad willing to be able to do something like that to put you through school, at that particular school. So that I'm sure that's incredibly formative. So you come a long way, very humble beginnings, all the way, you know, to where you are now. Would you say that that gave you a lot of drive, and eagerness to make it to where you are today?
Yeah, I suppose I can probably answer that question in two parts. The
Mm-hmm.
first part is just about like academic drive because like I said, my parents always instilled in me like the most important thing that I could ever do was study and do well in school.
Mm-hmm.
And even when my parents, had no money to speak of, my dad always told me like all the time, you pick wherever you go to school, we'll support you. It's our duty as parents to support you. And
Okay.
so when I got into Penn, which is my dream choice, my dream school, my top choice, an Ivy League school, I was so thrilled, and to know that my parents put in the ultimate sacrifice to allow me to go to school, and I didn't have to take out student loans. My parents financed that for me. Was really
Awesome.
formative. Part two, I would say, is when I started coming to my own as a profession, as a working person, managing my own finances. And I think how, my previous experiences really formed me was that, suddenly I was working like in Wall Street. I was working with a lot of people who came from a lot of money. And like I grew up on Saturdays, we cleaned the whole house and we listened to music and everything like smelled like pine sol, And so I was like, what do you mean on Saturdays you like go boating, or what do you mean on Saturdays you just go into brunch? I was like, I need to clean my house. And so I think how it shaped me, how those experiences shaped me, was that I was somewhat like I grew up with like I had certain rules or ideas of like how to live, how to spend, always being super money conscious, being very like frugal, buying things on sale. But then suddenly I'm operating in these environments where most of those people never knew what scarcity was, right? Like they're operating from like abundance and like everything is plentiful. And that's been like the hardest thing to navigate even to this day as I continue to like scale and progress in my career.
Okay.
I meet less and less people who come from my background, and more people who come from like a world of like kind of endless resources. And it's actually become more challenging to figure out what the best steps for me financially and professionally are, because I feel a lot of times that the people that like, I can't tell you the number of times I talk to people and they're like, yeah, I just kind of took some time off, and it was great. I just like found myself, and I was like, that just instills fear.
Yeah.
This idea that you just like stop what you're doing to discover yourself is just not in my DNA, like literally not in any part of my DNA. And so, yeah, as I enter the second phase of my professional journey, it's been something that I spend a lot of time navigating through, and why I share my own story, on my platform, because sometimes it feels alone when you're navigating these spaces.
Yeah. Yeah. Okay. So two more questions and then we'll go into venture capital. The first is, what led you into finance and what you do today? Is it because of the experiences that you had, or is that just a natural interest of yours?
Yeah, I usually answer this question like having going to Wharton. At least when I went to Wharton, there really was no other job. You were kind of seen as, sorry, Wharton, if you're watching this, but definitely the attitude across other students, like you're basically like a loser if you don't go into finance. So,
Okay. Okay.
in college, that was all I knew was investment banking, maybe consulting. But I guess like before coming to Wharton, why did I even pick economics as a major or want to study finance? And I would say, in my senior year of high school, we had this in Louisville. We had this cool program where you could take actually a college at the local university, at the University of Louisville, as a senior, and in your senior year. So my senior fall, I on a whim, like there was not many classes available, but one of them was macroeconomics, and I remember I fell in love with that class. I
Okay.
loved how everything was contextualized between like the world around us, money movement, and
Mm-hmm.
how things like supply and demand really shape like everything from like the cost of housing to gas to groceries. The way that everything was interconnected in this really elegant way with financial systems as a unifying, like through line was really impactful to me. And having never taken any, and I was pretty good at math. I was pretty good academically in general, but like that, I like that combination of like, okay, we use math and systems to make sense of like kind of these like qualitative things around us. So
Okay.
that I think that class is what was very formative to me and decided to pursue economics as a major when I was applying to colleges. And yeah, go to Wharton,
Here
like I
you
said,
are.
sorry. But they were like, ain't no other way for you in 2007.
Right. Yeah. And here you are. So it worked out. So that's great. And then, outside of finance, because there's a lot more to you. What are some of your other interests? What are some of your other passions?
Well, obviously, talking about finance. So,
Okay.
I've been a contributing writer for Forbes now for 6 years. My podcast has also been on for the same amount of time. And even though there's been like ebbs and flows in terms of like how often I've posted or created, the through line is like I really enjoy creating things, connecting
Mm-hmm.
with people. I love meeting new people around the world. I love sharing their stories. I love to travel, and so I think every time I travel, I'm always thinking about like, oh, how does this compare to like my experience like at
Right.
home? How does this experience to other things that I've seen? So I just love to observe the world around me, and so yeah, like I would say like the content that I'm doing is something I'm super passionate about, but I also love to. If you follow me on Instagram, like my battle with swimming. I love swimming. It's the hardest thing ever. It's so humbling. Every time I'm tired, I'm like, this sucks even more. So I like to spend time outside, swim, run. And when I was younger, I played piano and violin. These days, I don't do it as much, but I still love listening to music and have a lot of opinions of music. Maybe I'll start my own, like a separate, like music roasting account, like an anonymous one.
Oh
But first,
no.
I gotta get this Alone on the Money platform up.
Right. I'm with you on the music. I'm with you on the music. But that's very cool. Very dynamic. Got a lot of great interests, a lot of passion around finance. So it's very nice to get to know a little bit more about you. At the end of the episode, guys, we'll make sure that you guys know where her platform is. It's at the bottom of the screen, though, at Ilona on the Money. So you can actually tune in to learn more about her and connect with her as well. But so without further ado, let's get into venture capital. So how my first question would be, how would you explain what venture capital is to someone who is completely unfamiliar, brand new to it?
Yeah, so venture capital is essentially it's a type of investing where you support companies that are private, so not publicly traded. You can't find them on the S&P 500 or the
Mm-hmm.
Nasdaq, and you support founders with building their ideas. That said, venture capital, what makes venture capital different from like a loan or grants or things like that is that it's in like you invest equity, and so you basically take a percentage ownership of the company in the hope that when that company gets really big, your percentage ownership becomes something valuable, right? And so typically venture capital, when we talk about it, I would say there's like three characteristics. One, minority ownership. So venture capitalists
Mm-hmm.
rarely, if ever, take more than 50% of a company. It's usually more around 20 to 30%. It can vary widely depending on how big the fund is. Two, it invests in like really tech-enabled businesses, right? So you can be like, for example, I can start my own hair salon, and I might need funding, but venture capital is probably not the way to get my funding unless I'm doing something like building like an operating software for hair salons to be able to book more customers, right? So we're really talking about like technology and software. And the third thing I would say is venture capital typically tends to invest in what we call like asset light businesses. So there's rarely like a machine or a factory component. You're usually like not making like a mug. But I know you can't see it, it's blurred. You're usually not making something physical, although that really changes, right? Because one of the most famous companies of all time, Apple, was obviously funded by venture capital. And what do we know Apple for? iPhones, MacBooks, iPods, etc. Right? So I would say those are kind of the three characteristics of what venture capital is. Investing, bet the core is in minority investing in tech-enabled early stage companies with the hope that you're basically investing in the next Netflix, Apple, Microsoft, etc.
Yeah. So that's super cool. I think that's very eye opening. It's like the hunt to find the next big thing from a technical perspective. So very cool to know that. And so my next question would be who typically participates in venture capital? Is it something that personal investors can get involved in, or is it at a much larger institutional level?
The short answer is no. Personal investors cannot simply get involved in venture capital, and I'll explain how this works. So, when you think of supporting founders, there's really like two I would say like common or traditional pathways to think about it. One is via like a venture capital fund. I'll start with that. A venture capital fund is kind of a startup in its own way because venture capitalists, we call them general partners, GPs for short. Um, let's say they want to invest let's say they want to invest $1 million into the next Apple. Well, $1 million for most people is still not as readily sitting in the bank. So where do those GPs go? They have to go and ask other people to get money to then invest in the company that they want. Those other people I'll call the limited partners, LPs. We can talk about why they're called that way maybe another time, but let's just know that in a venture capital fund, there's your general partner making the investment decisions and the limited partner who says, okay, general partner Malachi, I believe that you are going to be the best person in the world to find the five next apples. And here, I'm going to give you $50 million to do that. Right. And so basically, general partners raise money from limited partners. They can raise as much or as little as they want. And then instead of having that way, when they find the next apple, or they think they find the next apple, they basically go to limited partners and say, hey, we found this deal. Please give us the money. And they make the investment. That's traditional. That's like how venture capital funds work at their core. And there's regulations around all of those things, right? On the other side, we have what's called angel investing. And these are individuals that we call accredited investors. So what an accredited investor is, it's just someone, I think not that I think, there are very clear regulations in the SEC and IRS about what it takes to become an accredited investor. There are certain income thresholds and or financial regulatory thresholds, as well as job thresholds that allow someone to become like an accredited investor. And as an accredited investor, you can then go and say, hey, I know this founder because we went to school together, and I think he's going to build like the next Netflix, and I'm going to give him 50,000 to it. Angel investing kind of is very, instead of having, a limited partner that you're asking money for, you're literally investing your own money. And it's typically called an angel investment because you're typically funding founders like before they even have a customer, they're probably just coming to you and saying, hey, I have like a really, really cool idea. And so as an angel, you say, okay, I really believe in you as a person. I'm super excited about this industry. Here's insert amount of money. Go build it and get started. So that's how people typically participate in venture capital as an accredited angel investor or as a fund manager.
Super cool. So, venture capital, or in short, VC, is at a very high institutional level with millions of dollars. But there is a portion that is angel investing where an individual could go about that, right? But I'm guessing that's probably pretty risky, right? Like,
Of course, yes.
yeah, that's pretty
Of
risky.
course, that I think that venture capital. When you're the less information you have about an investment, these are just core principles, I would say. The more risk, the more uncertainty, and so
Okay.
that is why the venture capital model is kind of predicated upon huge outcomes and huge successes. Because if you keep on taking, let's put the case of the investment fund that raised $50 million.
Hmm.
If you've taken all that 50 million and you made investments across 10 companies, right? So you put 5 million each, and each of those 10 goes bankrupt or fails.
Yeah.
You then have basically burned $50 million. So
Yeah.
you'll be hard pressed to then go back to those limited partners and say, give me 50 more, right?
Right.
And so therein lies the whole opportunity as well as like huge risk of I would say not only venture capital, but all private equity investing where there's limited publicly available information.
Yeah.
When you're trying to invest in like a stock or an ETF, there's
So much
copious amounts of
information. Yeah.
publicly available information that you can do research on. With most of these companies, they're kind of like the founders They don't have websites. The products don't have websites. They're going to change their name 7,000 times along the journey. They don't really have product market fit yet. So yeah,
Mm,
it's exactly that. But you balance like the risk with reward with how you make your financial decisions, right? So as an
yeah,
investor, I'm doing a lot of calculations to see, okay, like if I make this investment today, how big do I need the company to be in order for me to return the money that I need first to my LPs and then to myself, right? So we're not just blindly I'd say
yeah,
like that's also the difference. Like angel investors are burning their own money. So if you decide to give $250,000, then that's on you. That's between you and your God. If that company goes to zero, that's yours. Versus as a fund, we can't do that. We have what's called like a fiduciary obligation or responsibility
yeah.
to. We have to say that we tried to manage that money effectively. So there's a lot more. Well, it depends. Some angel investors are really, really sophisticated, but some are really out here just spraying and praying. And as a fund, in theory, that's not the best approach to take.
Right. I'm sure that you guys have to be good in order to stay in business, right? So, yeah. Okay. So very cool. Very cool. That's very eye opening. Um, huh. Okay. Interesting. And I've heard VC. I've heard of VC a lot. People always kind of throw that term around, especially in the social media bubble. I don't know, maybe to make themselves sound like educator, intelligent, but in reality, it is something that is done at a very high level. And I'm assuming that, or I'm gonna guess that it's not very easy to get into. What kind of skills would you say someone has to have to do VC? I know a lot of your posts, you kind of go into what kinds of things you look at when it comes to business owners, if you're considering investing to them. But what kind of things do you all look for
So, in terms of breaking into venture capital, or what we look for when we make an investment?
to make an investment? To make an investment.
Sure. Yeah. I mean, I think there's probably every venture capital fund, if you go on their website, they're going to talk about what makes them unique, what they look for. Sometimes they break it down in terms of like, we only invest in healthcare companies. Some will say we only invest in
Mm,
software companies. Some will say we only invest in companies who are valued at $20 million or less or $50 million or less, right? So
mm,
this is what's called like a thesis. You build like your own thesis around the areas that you specifically want to target because as you can probably imagine, there's more founders than you can possibly ever spend time. You can't ever talk to every single founder in the world. That's just not realistic. And also, if you did, you probably would not be doing any investing.
right.
So I think that it comes down to like after a period, like it comes down to building what's called a conviction. And there's certain like frameworks you can apply or think you can apply. At the end of the day, like people are people. They're gonna do, people are predictable too. So I think like these frameworks are all kind of like risk mitigation because you can never predict the future. But things that people typically like to see when they're backing a founder are like some kind of lived experience with the problem, especially if you're building in a place that's very heavily regulated, like healthcare, financial services. It's not enough for you to say, "Oh, I went to I'm so tired of my bank. It's charged like every time I want to do a wire transfer, it costs $5. That's stupid. I'm gonna have a bank with $0. Like that's not enough. You need to understand payment rails. You need to understand like intermediaries. You need to understand how money is like. So you need to have some kind of usually some kind of experience, either working like a Visa or a MasterCard or maybe even a Brex or something like that. So we like to see founders with like lived experience of the real problem and who have worked already on solutions in that space. I think one of the most underrated, the second component, most underrated things that I see founders that I think founders underestimate is team. I talk to a lot of people who are who are like, I have an idea and my idea is going to be so big. I promise you it's going to be so big. What people don't understand is like, if you're going to be a founder and you're going to raise money and you want to try to raise money, because you can be a founder and you don't ever need to raise money. You can just like go on and build and be amazing and hopefully get money. But if you're going to try to convince other people to give you money, you need to start convincing other people to help to build the product with you, right? So I always think that's why a lot of venture capital funds well, they'll say sometimes they don't like solo founders. It's not because you're a solo founder. It's because like the more you're able to bring on more ideas, more voices, you can build more quickly. You can find blind spots more quickly. So I feel like where most people get stuck is they're like, I'm me. I'm going to build it. My idea is brilliant, but it's not actually like brilliant ideas that take you to the next level. It's execution and convincing other people, right? So I think that's a core characteristic. And the third is like market size. Where, there's been a lot of times where I've done diligence on deals and the founding team is great. The product is great. They're getting like they're built, they're making money from customers, but the the part of the universe that they're investing in is so small. Like they're only like let's
Yeah.
say like they built a software for just like one type of community bank to use like only in their state. That's awesome. And by all means, like build that and like be successful. But it's harder to justify venture capital funding for models like that because we're really looking for game changing, industry expanding opportunities. Because as you pointed out, it's high risk. And so we need billion-dollar outcomes, and not just like smaller outcomes like that. So I would say founder market fit, a team that like a nimble team that caters to like strengths, for that kind of fills each other's gaps, I should say. And the third is large market potential.
Yeah, that was good. That was very eye opening. I think that makes so much sense. Even in my own journey with WealthWise Live, where I'm not seeking venture capital, but I do recognize the importance of a team. I hosted an event this past fall at the University of Alabama where I got to work with the Bama Nesby president and National Society of Black Engineers president on campus. And working with him was so crucial. There were things that if he wasn't available to do, it just wouldn't have got done, and vice versa. And that experience has led me to this spring and going somewhat into the fall, where I want to work with a team to host my next event. And I realize that that's something that you should do from the start. And you're right. You only have so much time. You only have so much bandwidth. When you can work with other people, get them going, and you all can work together, you can be so much more, effective. And so my last question before we go into real estate is, how do you think maybe somebody that's early in their career should view venture capital? We realize that it's very high level as far as investments go, and then you also have angel investing. Is it just something that you should just be aware of, or what do you think?
Again, is this from the point of view I'm a founder or people breaking into careers in venture capital?
I would say either people breaking into careers in venture capital and people who are just looking for different ways to invest and might not understand what venture capital is and kind of the limits there, or maybe even angel investing.
Yeah, I would say honestly, because venture cap, I would for the average person, don't bother with venture capital. Please stick, don't go chasing venture capital. Please stick to the S&P 500 ETFs that you're used to. It's a very to really make any kind of money, even as an LP, you need to invest in what we call like top quartile funds. So like let's say there's a universe of even like 125 venture capital funds. Only like 10 or 15 will ever make kind of money. The rest will just also fail. So
Mm,
think about those odds, right? So I
yeah.
honestly think that like you either it has to be a passion for you. Like
Mm,
so either because you're so obsessed with technology or you're like no or you're someone like I know some angel investors who were like retired executives
mm, okay.
at Novartis and Visa, and they're like, no, I spent 50 years in my career building payment rails, and I know exactly what's wrong with the ecosystem, and I'm going to find those founders. So the average person, like, don't even worry about, and we can talk about why I think that later, but is
Yeah.
really no need. It's probably more risk than you should ever really accept, and unless you have some kind of like real passion or really sophisticated tax allocation strategy, there's simply no need to really try to do this. You might whether it's as an angel or as an LP. So I would say that venture capital as an investment asset class is just simply out of reach for for the typical retail investor. And I think that's for good reason. Like most VCs fail. And so like if you're thinking about like wealth growth and preservation, like again, please stick to the S&Ps and 500. You will do much better
Yeah.
than trying to pick and choose which venture capital fund is gonna perform. And the truth is, like as I mentioned, like only 10 or 15 will really do well. Those 10 or 15 are some of the most famous they don't need your money. They're closed. They're not taking new LP commitments. So
Mm,
you probably like unless you're able to get at the ground floor with someone really exceptional, you're probably never going to access like the top returns. And so you're only getting there's that problem of like I forgot what it's public. You're only getting access to the most mediocre
yeah.
funds, and
Yes.
as a result, like the adverse selection there, right? So that's step one. As an from the investment standpoint, as if you're someone who's like interested in breaking into the industry, I don't know. I maybe I shouldn't say this, but I definitely think there's like a strange inflection point right now going on in venture capital. For all the dynamics that I just articulated, most funds actually don't perform well. Most funds fail. Just like start, I think they have the exact same like success rates as like a typical startup. And
Hmm.
so I would say if you're interested in like instead of just thinking about venture capital, I would think about like what about investing is appealing to you as a person. What is it about? Is it like do you like to make bets? Do you like to figure out where the
Yeah.
winners are? Do you like to like convince people of other things? There's so many ways to be an investor professionally. You can
Hmm.
be an LP investor, you can invest in public assets, you can invest in private. There's so many flavors of it. So I would encourage anyone who's thinking about like their as who's a student or thinking about the industry to first identify what is it that they like to do about investing and then take it from there because I think venture capital has been this like bright and shiny object for a couple of years, but the reality
It's
of it
not
is I
what
think it's
people
an
think.
industry in a lot of like flux right now, and I'm not really sure what the future of it is. So I would first break it down into like what do you actually like about investing.
Yeah, and that's exactly why I asked because it's not what people think. Like I said, I've seen so many different things online, venture capital, but in reality, as you've explained, it's just not what people think. And as you mentioned, there are other types of investments which you also are active in, and what really I would say interests me a lot is real estate. Real estate is, I think, overall an awesome investment, whether you're doing residential or commercial. But you particularly have some experience with residential real estate, and so I wanted to ask you a few questions about that now. So, how would you personally define the real estate market now that you are a part of it?
That's too broad. Specify.
For residential real estate. So, as someone who is trying to invest for the first time, when you're doing things for the first time, you really don't know what the process is. You've gone through that process, you have properties. So, how would you explain that experience?
Oh, interesting. I'll take a step back because, when I was starting my career in finance, and I was just thinking about like I wasn't sure exactly what industry I'd be in. I didn't know I'd be in venture capital or things like that. And I always remember, even in my classes at Wharton, like the people who were into real estate were different. Like there was like special like real estate finance classes, and there was like real estate finance versus other types of finance. And I always understood even like the entire asset class of real estate as being something different. Because like I said, even in my core finance classes, there's like a whole different like minor you can take within Wharton. Like you can make a real estate finance major. So I always understood real estate was something really different. And what people always said was like, it's a it's like a thing. You're investing in like this, like the amount, like a thing. You're investing in a physical asset, and that makes it really different. And so I always like knew those words, like I understood the words, but they didn't really like penetrate my skull until I bought my first property. And I think of real estate as investing in people. I really do, because there's no other, in my opinion. I mean, come for me in the live, whatever. But like it's you're really investing in like a place, a community, a person. And so I think there's no other way to like really shape how people live their lives, but in a more impactful way than like real estate. Because like for my first property that I bought, it was really abandoned. There was like a hole in the roof. It was neglected. People there were like squatters in there. And I really saw firsthand. And so as a result, that little corner of that where that house, that physical house that stood neglected, as a result, it was like a sad, like literally a sad little corner of this little block, right? And then as, my parents and I fixed the roof and like started bringing it back to life, suddenly like the lawns of my neighbors became cleaner. suddenly like the house, like the flower, people started planting more flowers and things. And it was a very just like a eye-opening thing to me to see. I was like, wow, like it's really like it's a transformational block by block thing. Like one, that's what the power of like one home can do. It could like because when people see, because people see real estate, they can interact with it. And even if they're not going into my house, they're seeing that the house is taken care of. And when they're seeing that, they're acting on it, and suddenly things change. And so for me, I view real estate as really like it's community building, it's community growth when done correctly, and it's investing in people. And I think a lot of people like, so sometimes when I like see some of the stuff on like social media, and they're like, people get so hyped up and like class A, class B, the numbers, da, 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 da. But for me, it's like I really enjoy giving. I like the idea that like I'm giving someone something that they hadn't didn't have before. I'm taking something that was abandoned and neglected, and just through my one house, I've like revolutionized my block. And imagine what I could do if you did like multiple houses or a whole building. So for me, it's not like a house. It's like a place that people come to live, to enjoy life, to experience, to exist in this world, right? And so that's how I think about it. And I think more people should think about it from that standpoint rather than just like numbers on a spreadsheet and how much a roof costs. Because ultimately, what you're providing when you invest in real estate is like an experience for a human being.
Yeah, that's an awesome answer. It's an awesome answer. So you view it as investing in others, which I can definitely see that perspective. I think it adds the human back in you. I from an investment perspective, most people are typically the goal is to increase your income, typically, right? And so I like the spin that you gave of you're you are doing that, but you are also helping your community. You're helping people. I think that's very cool. Um, so, uh, kind of going backwards a little bit, what took you from interest to action? So, did you think about it for a while? How long did you think about it before you actually took the steps?
Yeah, I personally always enjoyed going to open houses. And
Okay.
so even when I was like even before I knew I wanted to buy a house, I would go to an open like and I lived in New York, I lived in San Francisco. I would go to open houses.
Okay.
I would sometimes just set up viewings with realtors and just see some places because
Mm-hmm.
if I had read about it like well, I was living in New York City at the time. I remember everyone was like, "Oh, Jackson Heights is like the next up and coming place," and I
Mm.
just like scheduled some viewings in February just to see what's going on with my own two eyes. And so I think by the time I bought my property, I had been like viewing properties for like years and years across. And I think what's important is I viewed it across like every different part of the nation, like from San Francisco to Chicago to New York. And so I got like a really good sense of like, this is how much something is worth in New York. This is how much something is worth here. And so like I had really good comps in my own mind about what was where. And what really took it to action was just kind of like I think I was my story was featured in Business Insider and they did like a very extensive write-up and I'm happy to post the link in it after. But basically like a short story of this is it was the pandemic. I had relocated back to Louisville where I'd grown up because it was the pandemic. And I was and what we thought was going to be like 6 weeks ended up being like 2 3 years, right? Working remotely in this like crazy world, right? And at that point, I was like, man, I've been living on my own for a while, but it's kind of getting crazy living with my mom and dad as like a 3 year old. Like I'm saving on rent and this is great, but I don't know if I was like, I need my own place. And so initially I just started looking at like a place to rent in Louisville. And then I was like, but then I was like, this is just like disgusting to me to rent when I literally have free housing here. So I was like, okay, what if I think about buying something? That way I can like live, like, get something out of it, right? And then I was talking to some friends about this, and as it turned out, I had more friends than I thought in my network who were like, "Oh, I bought some my second or third," and I was like, "What do you mean you bought several houses?" Like, and or they were like, "Oh, I have like a duplex here," and I was like, "Wait a minute, what do you mean?" So I just started talking to my friends about it more and more, and actually I had some friends who pushed. They were like, because I was showing them the places I was looking, and I had some other friends who were really like just like me. They love touring houses, they love seeing real estate, and they're like, "Why don't you look at this neighborhood? What about what?" And I was like, "Oh," and I was like, "You don't understand. That neighborhood is like so like not nice." And they're like, "These houses are really, really like beautiful and cheap. You should look at it." And so then I started to bring in like my mom and dad. I was like, look, I was like, check this out. Like, look at these old houses in these area that I went to high school in. And they're like, okay, this is kind of interesting. Like, and then eventually we saw, my mom and I saw this one house that was just like, it was the one that I mentioned, like hole in the roof, squatted, like the glass door had been smashed in. And she was like, this is the one. This is and I was like, excuse me. And I was like, no. I was like, we're moving on. Thank you so much, the realtor. I was like, that's just illusions. We don't want to see this house anymore. But then as we kept on looking at other properties, my mom was like, no, like she's like, think about it. That house that we saw that was all like abandoned. She's like, we can like build it from scratch. We don't have to she's like, look at the potential. Think of what we can do with it. And so I was like, okay, mom. And it was the price was really good because it was so neglected compared to the others that I was seeing. Then I was like, okay, if you think that we can do this really well, I was like, I will buy this house, I will fund these renovations, and we'll go for it. And so I don't know, I think the best way to say it is like in Russian, we have an expression, Глаза боятся, руки делают, which means like your eyes fear, but the hands do. And I think like anything good in life is kind of like you have to kind of wing it sometimes. Like when I thought I was like, I don't know how to do this. I don't know how to like rehab a historic home. What's a tax credit? What's renting? Like so my eyes had so much fear, but here I was just kind of like typing away, figuring out the finances, doing what I had to do. So you just kind of learn along the way and yeah, go from there.
Yeah, awesome. So I'm glad you ended up getting into it. And I think that what you described really is the step. Or that's the first step. Just do. Stop, thinking and just take action. And so a couple other questions, how did you think about, financing the returns and property selection? So the idea was, hey, I don't want to rent because I have free housing, so let me get something out of this. How did you think about the financing? How do you view leverage or debt? You know, did that concern you at all?
No, I didn't think about it at all. I did not think about it at all. I know to buy like all, I was like, okay, mortgage, okay. The only thing I knew was like, it's like a 30-year mortgage, and I was like, okay, can I make, when I ran the numbers, I was like, can I make this payment on, like if this, assuming this is the mortgage, the insurance and the property taxes, like, can I make, something happens to my job or something, can I afford to make these payments? I also like a student loan. So I was like, okay, this is what I have to reach. And so, no, I didn't think about it. I really just, like, I put it, like, the most important thing I was concerned about was entry price, was making sure
Okay.
I bought it for the price I wanted. And so I was really, like, I was super dogged on, like,
Yeah.
trying to get it as low as I possibly could. And then I went and got financing. Like, it was not maybe I was in like now that I'm learning more and I
Hmm.
see other ways that people do this and they're like there's all kinds of financing solutions, but I did not know any of that. I simply was like, I'm going to buy a house and I'm going to get a 30-year mortgage because that's what I know.
Right.
And
Okay.
that was that.
Yeah, and I think that's awesome because I think with debt and purchasing property, there's a lot of fear around that. Me personally, I'm a risk averse person, so I don't like the idea of debt, but I do recognize that depending on what it is, you have good debt and it can help you more than hurt you. And rental properties are one of those things, whether you get a mortgage or something like that. I remember some of the conversations we had, but you talked about taxes and the different benefits like that, as well as wishing you maybe had done that earlier in life, right? I
Yeah.
mhm.
Sorry, go ahead. Go ahead.
I was gonna say I'm 24 right now, so would now for a young person my age would now be a good time to do something like that.
Well, I always said personal finance is more personal than finance.
Okay.
I think someone else said that, but I stole that quote. So I think like only you ever know, only you have the complete
Okay.
information on your not only financial picture, but also life picture.
Okay.
And sometimes things make sense on paper, but it's just not the right time. Like
Okay.
maybe like emotionally you're not in the right place, mentally.
Mm-hmm.
Maybe like it's just because things make sense on paper doesn't mean you have to. It's never black and white like this, or rarely, I would say.
Mm-hmm.
Not only in finance, but in anything in life. I
Yeah.
will also say, like, again, I can't emphasize enough, like, how much math I did when I was looking at this property. I think I
Yeah.
had a spreadsheet, like, and I'm lucky, I guess, that I have friends some of whom are very sophisticated real estate investors,
Yes.
and they slice the number as fours, and they're like, Ilona, any way you cut this, this is a deal. Like they were like, look at all the like we literally had 20 different scenarios, right? So I think I don't know, I think maybe I'm gonna like veer away. Maybe this is like not popular, but this discourse around like debt on social media, I think is just like simplistic because people are clicking on things. I don't think that's like a real, you can't think that like life is not like that. Life is not like dead. Like, like you're not like you know what I mean? Like it's all about like what are your goals and what are you trying to accomplish? Like no one's telling you to go. Like I would never tell someone, yeah, get out a loan to be in a pyramid scheme. That's crazy talk, right? Like you need to think about what you're doing, right? But like everyone knows that education is one of the most important things you could possibly invest in, I hope, right? And then there's like an understanding that like real estate is important too, right? So like I don't get it when people are like, I personally don't understand it. But again, maybe it's because I grew up with like a family where I wasn't like, my parents were always like, pay off all your credit card. Like we didn't have that concept of like good or bad. You know, we were just like, pay your bills. That's it. Like pay your bills, life is good. And so, anyways, going back to like the whole 24 and now like again, like run your numbers, look at the investment. There's a million spreadsheets on Instagram and TikTok and online. Like talk to your friends who've done it before. Um, and see if it works for you. Only you know that. Again, like, but no one can predict the future because like you might do the numbers and say, oh, this mortgage payment, I can easily do it right now. But then tomorrow shit, I don't know. Like you can like many bad things, anything can happen, right? So you can only control for the factors that are available to you at that point in time, and you can make the best decisions with the information available at hand. I do think that though, like in my life personally, like where when I lived in San Francisco and even in New York City, the housing costs were much lower than they are today. And if I had more like gumption or a little bit more like wherewithal, I would have probably, if I'd known then what I know now, I would have maybe tried to buy like like something small for myself and like lived in it for that period of time. Only because in addition to like the math, there's also like the experience. And one of my friends from social media, Jana Ann, has a really great quote about this. That she's like, it's not enough to just like be on the sidelines watching the shots. You have to get in the arena and play the game. And the sooner you enter the arena and play the game, the sooner you can figure out like you're like, oh, this is how this works, this is how these reps work, right? So like by the time I did like buy my first property, I like learned a lot of renovations. I was like, oh my God, this is so much to learn. Like, and maybe if you had started earlier, I would have gotten more reps. I would have been more savvy to some things. I would have known about like how much to put down and whatnot, right? So I think like if you're younger and you're in financially, if you're in a position to do so and you run your numbers, and you know, depending on your goals and objectives, and you can. I think it's a good learning experience. But I would never say to people, just go buy a house when you can. Like, that's not how life is. Like, you have to do what makes sense for you financially at that point in time. And maybe it's not like a long-term priority for you, or maybe you don't know if you're going to live in that city for a long time, or you don't know how to manage it, right? But if you're financially capable of doing so and the numbers make sense, entering the arena to try, better do it sooner than later when if you don't like it, you can still sell it and maybe not make a big loss, versus later when like maybe it's like the house that your whole family needs or something, right? It's all different. So yeah, I would say I don't know. I don't like telling people what to do or not to do, but uh I definitely think having reps in any type of investing is helpful to have, especially if it's something like that's building wealth, building stability for you long term and not a pyramid scheme.
Right. That's fair. So, what would you say are the benefits that you've gained since you had your property? Right. How has it helped you?
I would say the biggest thing is just like insight, honestly. Like, yeah, like there's like the whatever, like the tax things, and you can talk to your CPA about all that. But for me, I think the biggest thing has really just been like insight and understanding how things actually work. So like how much repairs cost, how long repairs take, what you actually need, like what's like a want versus a need in a home, what like it means to like what like how to renovate for when you have tenants versus when you have yourself. It's just like more insight and experience. And so now that I live in Southern California, like you know how realtors are. Realtors are realtors. They're trying to sell. And now when I go to see a property and someone quotes, they're like, "Oh, the roof could be replaced for 5 grand, I'm always like, I don't really think so. Or like having replaced two roofs, I can tell you how much that could probably cost. Having put in new HVAC and electrical systems, I can be like, yeah, like it's time consuming. And like problems come up. So I think it's just like the power of like insight, makes it easier to like, not easier, but like I have more information now than I did before. And so I kind of feel like more like armed and ready when I see properties and like think about offers and what's fair and what's not fair, especially like in a market as insanely expensive as Southern California. I feel like some people here are just like, they've just gotten used to like the crazy appreciation that's been happening here in the last like 20, 30 years, right? But they forgot what happens when times go like nothing is in finance, we always say past performance is not indicative of future success. And so like so many people here are just when I talk to them, they're just like, yeah, so I'm gonna invest 800K and it's gonna be 2 million tomorrow. And I'm like, none of that is okay. Like that's never a guarantee. You hope that happens, right? But so I think having like the insight of having actually like invested in something and I see like my Redfin, they're like one day it's up and one day it's down. And I'm like, none of that is real. Like all that's real is like the payments that I pay, the inflows that I get, like the cash that I'm earning or spending is what's real. And so I think like insight and experience with like how much things actually cost and those dynamics has been the biggest benefit or lesson for me. Yeah, rather than like anything else. Because I will, if you ask me honestly, I would say like whenever people say like someone called me like, oh, like I think real estate could be great passive investing, and I was like, passive. I was like, I have cried, I have freaked out, like on my real estate investing journey, like I have been like it is stressful. Like I am actively like stressing all the time. So I definitely think it's like, yeah, like now that I know that today, like just how emotionally attached, like how emotionally challenging it can be too, um, shapes like how I inform the decisions of the future too.
Yeah, that I think that makes a lot of sense. I think when you have the opportunity to really kind of see what things are like, it definitely gives you a leg up. So I appreciate your answers. With that being said, I'd like to turn it over to the audience for a few questions. I saw that there were a few questions in the chat, but it looks like I can't see them anymore. But for the audience, if you all have any questions, would you all mind re-asking them? I think I do remember one. Someone had asked for venture capital, how important is the CEO's personality? Uh, so that
Damn.
we can use that to start.
That's a great question. And if you haven't noticed on this live, like there's always layers to this stuff. I never believe in like simple answers. I don't think life is like that. So when people like, I feel because I'm not going to sugarcoat it, like venture capital has a huge problem with diversity, right? I think something like less than 1% of all VC dollars last year went to Black founders. And something like the vast majority of GPs are white men. I'm just going to say that, right? And so it kind of makes me laugh because I think I've seen other investors who have like frameworks on, they try to diligence personality and they'll put things like grit, hustle, like ambition. And I'm always like, so how do you measure said grit? Like what percentage of grit is what takes you from like a go to a no go? Like how do you measure ambition, right? So I think it's tricky because I definitely see like attracts like people. Humans are like we're simple creatures. Like we tend to like when we see people who look like us, we're like, oh, I trust you more, right? And so
Mm.
I kind of think that like with a lot of VCs when they're like, oh, we want like founders who are ambitious, like the things that show up as ambition for men and women might be the exact same thing, but a woman might be penalized for that, right? And so um when you start talking about personality characteristics, I think it's always really interesting to see what other investors have to say. And I always try to keep in mind, like this industry, like I said, has a huge representation problem. So um, just because like you're quieter or maybe like more thoughtful of a writer doesn't mean you should go change your whole personality and like be super extroverted to pitch, right? I do think like if you were to ask me like what characteristics I prioritize, I've always been a fan of people who are like I don't know, who just like say like they have a goal, they have a plan, they articulate it, and they deliver on that plan. And I'd rather work with people who say like, oh, we were supposed to reach this milestone in 5 months. We made a mistake. Here's what we learned. I'd rather work with people who communicate early and often, and who keep you in the loop, and who I see like when you give them an intro, you're like, oh, talk to this person. They follow up and say, I talk to them, thank you so much, here's what I learned. So those are the types of characteristics of founders that I think, for me, I work well with. Whether that's like a certain percentage of grit, of sparkle, or whatever you want to call it, I don't know. But that's, I think, like being a good communicator, being disciplined, and someone who focuses on relationships in the long term, and nurturing that rather than just being someone who's very like, give me any leads I can, never following up. I think those things matter more. And whether you're introverted, extroverted, whether, you like to network a lot or not, like, I think those are all things that anybody can cultivate and work on. So I would say that.
Okay, thank you for that one. And there's another question. It was for someone deciding between real estate and other early stage investing. What questions should they be asking themselves before they choose a path?
Yeah. I would say, I think at the end of the day, it was venture capital, right? Was so not real estate was the question that it was related to. Just wanted to make sure. Yeah.
Real estate.
Oh, really? Oh, sorry. For real estate versus for a career or for like personal investing? Just a
I think
career.
this is personal investing.
Oh, yeah. Well, I would say like the same like core principles apply as everything else. So you
Hmm.
have to make sure you have a strong, do you have an emergency fund? Where are you in terms of your retirement allocations? Like, do you have any other like high interest debt, like, like credit card debt, et cetera? Student, like take stock of what you do have. And for me, like I was really fortunate that when I was able to buy my own house, all of that was like I had strong emergency funds. My retirement was on a good path. My student loans were like at a fixed rate, auto payments, and I had enough cash to finance like my down payment
Hmm.
and some of the renovations as well. So the first thing I would do is take stock of like what you have today, and it's okay if what you have today is not like necessarily enough, right? But
Hmm.
at least you can like know what you have today, know what the average like in your market is, and you can start building a pathway to get yourself there, right? So I think um, I'm very much a fan of like making payments as like clean and uncomplicated as possible. So I know that if I control my financial house, I'll have access to better terms on the mortgage rates and financing structures, et cetera. So
Okay.
I would definitely start with taking stock of like what you have today, and making sure you have like a strong financial foundation because things do go wrong. And it helps to have like cash to pay for that.
Right, most definitely. And then the last question, because we're running out of time, but is what separates people who own real estate from those who actually build wealth through it?
Ooh, you know what? That's a really good question. I'm not sure the answer myself, but I can tell you what I think it is. And I
Okay.
think the people who like just like, like our moms and dads probably owned houses. Like my mom and dad owned their house, but they never invested in other properties, right? So I'm like
Okay.
the first in my family to do something like that. And I think from what I've seen, what separates people who own as like their primary residence versus those who like scale and build successfully
Okay.
is ability to tap into like financing structure that keeps your out of pocket expenses lower. So you're not always tapping in because it takes a long, like, let's say you're buying $100,000 home and let's assume a 20% down payment, which you don't need to necessarily have, but let's just assume that that's like $20,000. And if you want to buy several $100,000 homes, like, I don't know about you, but like it's hard to get $20,000, right? So I think where the people who generate the most wealth or who scale successfully are the ones who don't have to get 20,000 K in cash every single time, but who are able to do like some kind of like financing structures with maybe their credit unions, their community banks in order to access financing that allows them to scale and get rental income instead of going each time back into the well of their savings. I'm still on my journey with that as well. So maybe we can do a part two when I crack it. But that's, I think, what I've observed to be the case between, just like owning one or two and kind of getting by and like scaling successfully.
Okay, yeah. I think that makes a lot of sense, right? You can't keep building it if you keep dipping into it. So I
Exactly.
think that makes a lot of sense. But with that being said, we're here at the close of the episode. I think it's been great. I think it's been very eye opening, to learn about venture capital as well as real estate, even your perspective on real estate as a whole. And now to close us off, each guest always does the 5 WealthWise tips. And so I am incredibly excited to hear what you have to say. And now you can share those at this time. I think you're muted.
Sorry. Try to be mindful of the background noise here. Well, again, thank you so much, Malachi, for letting me come on your show this today, and for the wonderful questions from the audience. I'm sure if there's any more you guys have, feel free to DM me. But I think so for the five core like lessons, it was kind of hard for me to come up with them, but here's what I
Okay.
think I've distilled them down to. The first is that you're allowed to wait. It's okay, like as I mentioned with like real estate investing, right? Like just because everyone else around you may or may not seem like they're like actively buying homes or buying stocks, whatever, it doesn't mean that you have to like jump the gun on anything. So one thing that my dad always instilled in me when I was a kid was like read every single document, and like if you have any question, make sure you get answers to every question you have before you make a decision. And so I in real estate too, like I was just looking at a house the other day, and like there was a discrepancy on the rent roll, and the realtor was like, "Oh, she should just put in the offer." And I was like, "Absolutely not." I was like, "You need to go and give me the answer to this question before I do anything else," right? So I always tell myself like time is on my side. I'm allowed to wait. The second is I would say is that early no's actually save energy for later. I know many times like in my career I felt like if you saw, Malcolm, if you saw the number of resumes I have on this computer, and the number of jobs I've applied for, the number of interviews I've had and gotten no, like, and been rejected from, it's like it could feel very like defeating at the time, but every no I think is like an opening for a door that's like being opened for you. The same when it comes to like personal finances, or even like if you put a bid on a house and you lose it, like rather than being like super stuck on that, like to me, like reorient that as like this is energy for later, this is energy for something better. The third I would say is to follow like patterns matter more than like peaks. So and again, and back to that example of, like Southern California real estate, rather than focusing so much on like huge outcomes, even in venture capital too, of like, oh my gosh, like how can we get the next Netflix? Like observing like what makes things kind of like go smoothly, and observing like what happens when things are just going right, like those patterns
Mm-hmm.
can usually be more informative than like just chasing these huge wins. The fourth, I would say, as you know, like clarity comes from action. Like you're allowed to wait, but also like start testing things out. Just try, like just sitting and thinking and mulling things over. Like yes, that's good too, but like where you can engage in action and see what you can learn. If it's like a risk-free way to do that or a low risk way to do that. Um, and the last thing I would say is that, you can use money to buy time and peace. I think going back to what we talked about, like scarcity mentality earlier, this is something that I'm like learning myself, but it's okay to use my money to get a cleaner every now and then. It's okay to use it on getting someone to help me manage my emails. Like,
Right.
if those things buy me time and peace, that opens up more opportunities for me to do really cool things with it. So those are the five things I would say.
Right. Awesome. Well, thank you so much for sharing those. Everybody, I will be sharing her WealthWise tips on the page soon after this episode. And I'd like to thank you once again for coming on, Ilona. I think it's been a great episode. Once again, very eye opening. And without further ado, until next time, you all, as always, master your money and secure your future. Malachi and WealthWise Live out.